My general view is early stage adoption that is getting real adoption. And we're seeing the numbers of the TVL and the stablecoin use and all of the stuff going on in SUI in a lower free float token goes up more. It's as simple as that. And it goes down more in a bear market. And then you need to see how many of the developers and the projects stick around and how many of the people who own the token stick around. And that's what ETH went through in 2020. The 2019 bear market, that was ETH's test. Solana got tested in the 2022 downside. SUI will get tested next time around, probably. Here's the chart of SUI ETH.
That's
So
an interesting
obviously
chart.
it massively outperformed. It's
Yeah.
now correcting. You need to see some sort of, my guess is we'll see some sort of correction pattern that probably gives us another leg higher, but wait and see. But ETH is currently outperforming. I have no reason to believe, this is on the weekly chart, that it stops yet. But I've owned a bunch of ETH via NFTs, and I will be looking at where this finds a base. Does this morph into a different chart pattern, or do we just kind of perform in line for a bit? Don't know. But I mean, Christ,
Yeah.
that was a good trade. This whole kind of SUI ETH trade.
It's been a very good trade.
Our general view, using our macro work, is the dollar probably still goes lower, that we've got another leg to go. And that's the leg that would confirm a pushing into, let's say, Q2 versus Q1 of 2026. Also, listen to what Scott Bessent, Trump, and everybody says. They basically want a weaker dollar. And so everybody in the world wants a weaker dollar because it helps the business cycle. It helps everybody. People need access to dollars. So I still think we've got another leg lower before dollar strength starts kicking in. Normally, when the economy is strong, the dollar is weaker. It's when things turn again that you tend to get the dollar strengthening. So no, I'm still biased towards weakness.
Macroeconomics expert Raoul Pal expressed his optimism about the Layer 1 blockchain, SUI, suggesting that it is poised to enter into a new phase of outperformance despite recent market corrections. He shared charts indicating that SUI has bottomed out within a descending channel and is finding support around $2. This analysis suggests that the cryptocurrency is poised to rally and potentially outperform other major cryptocurrencies in the near future. Paul's short-term analysis shows that SUI is approaching the bottom of its current price channel, which could signal an imminent reversal. He also offered a long-term perspective, showing that SUI is trading within a larger triangle, often seen as a bullish continuation signal. This pattern suggests that SUI could continue its uptrend as the cryptocurrency market recovers. According to Paul, as Bitcoin surpasses its all-time highs, SUI is expected to outperform and remain among the top 5 cryptocurrencies in terms of performance in this cycle. He advises investors to be patient and avoid being driven by greed, desperation, or fear of missing out, FOMO, as these emotions often lead to poor investment decisions. Paul's analysis is based on technical indicators and market trends, offering a cautious but optimistic outlook on SUI's future performance. His recent comments on the global money supply M2 indicator suggest that Bitcoin could experience a significant upside, potentially around 29% from its current level. According to Raoul Pal, Solana and SUI will make you the most money in 2025. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
And that this stuff is likely over time, as the wealth in this space, I think it goes from $3 trillion to $100 trillion over the next 8 years. That'll be the largest accumulation of wealth in history. And wealth always flows upstream, and art is the top of the pile. Even if you go to an art collecting billionaire, they might have 5 houses. After that's hard to manage. But in those houses, they have 10 times the value of the house in art itself. Right, so it has always been a proven store of value. And so what we're seeing is as ETH goes higher, the prices don't adjust down, which is what people thought happens. What actually happens is wealth creates demand for this stuff. So this stuff is ripping. And, I think the stuff that I started buying in 2024, early 2024, is up between 3 and 5x in ETH terms. And then ETH is up another, whatever X, depending where you bought the NFT. So they become this massive multiplier trade.
Julian Patel, research director at Global Macro Investor, estimates that the digital asset sector will grow from a current capitalization of around $3.5 trillion to $100 trillion within a decade. With the cryptocurrency market doubling from early 2024, he lays the groundwork for an unequivocal diagnosis of the labor market in developed countries. The labor force participation rate isn't about to increase, it's destined to continue declining. This is a structural problem, adding that humans are already being replaced by AI and robots at a dizzying pace, and this shift is just the beginning. It's deflationary. According to him, the shrinking workforce and inflexible promises of social benefits form a combination that reinforces the need for continued stimulus to keep the system afloat. Fewer workers, more technology, same debt. All of this is reflected in his key projections. We are just at the beginning of a global race, a race by institutions, states, and individuals to accumulate as much Bitcoin as possible. This boom, he predicts, will propel the cryptocurrency universe from a $3 trillion asset class today to $100 trillion in the next 7 to 10 years. Doing the math, an increase in the current $3.55 trillion market cap implies a compound annual growth rate of 40% over 10 years, or around 61%. If the time frame is reduced to 7 years, both ambitious results but unprecedented in previous crypto cycles. Patel admits that the path will be incredibly difficult and incredibly rewarding in both the worst and the best of times, but insists that Bitcoin is part of the solution. He and Paul called the race for scarce assets the greatest wealth creation opportunity of our lifetimes. Paul, whose presentation at Real Vision SUI Base Camp last May called the cryptocurrency a supermassive black hole that overtook and swallowed all other assets, reaches similar conclusions. He places Bitcoin in what he calls the banana zone, a reflexive phase where liquidity expansion and herding behavior interact to generate parabolic gains, with a cycle target of around $450,000 per cryptocurrency. Paul's estimates imply a Bitcoin market cap well above $40 trillion, even without altcoins, complementing Patel's upper bound scenario. Raoul Pal suggests that we are heading toward an economic singularity. He argues that people have approximately 5 years to adapt their financial strategies to this impending transformation. According to him, the changes that are coming between now and 2030 require immediate preparation to ensure financial stability. He emphasizes that wealth creation must be a priority in the face of these global economic upheavals. Paul's warning of an impending economic transformation by 2030 mirrors his previous analysis of Coinbase's institutional strategy with brightest, where the focus was on adapting to changes in the cryptocurrency sector. In light of these perspectives, the urgency he expresses in preparing for the so-called economic singularity reflects the themes established in his ongoing analysis of disruptive trends and market strategies. Paul also suggests that digital art could be the best long-term store of value due to its unique properties. His analysis examines various factors that contribute to the perception of value in digital assets, suggesting a burgeoning market that could rival traditional assets. Paul's perspective on digital art as a new form of wealth storage aligns with his broader view of the evolution of digital assets, previously detailed in his analysis of Coinbase's institutional strategy with brightest. His framework for understanding value in cryptocurrency markets, as described in the Everything Code, continues to drive the conversation around the intersection of technology and finance.